Okay, y'all. It's Wolf the Rockstar here, and I'm about to start going live. Hold on, let me. Hopefully, this works on YouTube. I'm going live on TikTok and YouTube just to backtest. I need a backtest anyway. Show my ICT concepts and how I do things. And yeah, we're just gonna go. If you're on here on TikTok, I'll try to read comments, and on YouTube, but I'm here just to do my thing. So yeah, I have so when I trade, I have these indicators. I have the ICT sessions, and then I have fair value gap indicators on, so I don't have to really look at them. So when I back test, those indicators obviously are not there, so it trains my eye better anyway. However, they have this sessions indicator, but I switched the times to the ICT sessions, which is Asian, which is I think either 8 p.m. to midnight or 6 p.m. to midnight, and then 2 a.m. to 5 a.m. for London. I start my New York at 8:30. Some people do 8 a.m., some people do 9:30, whatever, and then until noon because that's how I trade, and those are the only times I trade. If there's not an entry or setup in this hour, I don't trade all day, and that's why I just have it like that. In the ICT sessions, though, it does have AM and then lunch and then PM. So I like that because, like today, PM liquidity was swept. Oh, I don't know what I just did. PM liquidity was swept, and like I wouldn't see that. I wouldn't see that on my chart, on the backtesting chart. That was the target this morning. So yeah, let's just get started. If you have any advice, shoot it at me, but I'm just gonna do some back testing. I don't do what am I trying to say, the actual orders on FX replay, because if it doesn't happen before my time, I will close out the trade. Like, I'm not one of those people who's gonna and it won't let me. I tried that once. I tried to get out of a trade and close the position, but it wouldn't let me get out of it unless it hit the take profit or hit the stop loss. So, and it wound up going into the next day, which is not how I trade. If it doesn't happen in those first 3 hours of the day, I get off the charts, I have to close the trade and profit. That's it. So I just mark out with the long tool or the short position tool, and then that's just that. That's how we do it. And I mark out if it's a loss and we go over it. It's not just oh, how much money I made, how much, because money is not the focus. Learning how the charts move is the focus. So since my session starts, I'm doing this from January 1st, 2023. So next New York session is, okay, so I did all that marking up for no reason. Here we go. Asian session, London session. So our points of liquidity, 15-minute chart, 5-minute chart, NQ. I mark out liquidity first, Asian lows, London lows, Asian highs, London highs, unless it's like this with Asian highs higher. If there's a close liquidity above further down on the chart, I mark it there. I mark it there. And then I look for a setup between 9:30 and 10:30. So I mark out 9:30. I used to get on at 8:30, but lately the moves at 8:30 have not been as often. So it's really no point. If it's every now and then, there's really no point. So yeah, then we're gonna play it out. We wait for liquidity to be swept. And then I also look at I pause at the 9:30 candle just to see, because usually it'll give you a direction where it wants to go. Like we have this long wick, it wants to go up, but since we're already closed, I wouldn't get in. Sometimes I will get in to take it to this liquidity if I'm over leveraging, but then it's not smart, because if it does go down a lot, you can get liquidated here, even though your liquidity point, your stop loss should be at the bottom of the candle. So yeah, we got what we got today. You see, if you had gotten on this 9:30 candle to go up for a quick scalp, that would have been great. However, if you didn't and you wanted to go higher, you'd be stopped out because it's clearly about to reverse. So we don't have any fair value gaps. I usually mark fair value gaps too. Oh yeah, you just wouldn't have gotten any plays on this one. I usually get in right after a candle with the hammer like this. So I probably would have gotten in, because again, when you watch this in real time, it'd be slow. It'd be like 5 minutes. And then just take it to the opposing liquidity. Probably, if it's a good 1 to 2 plus, I'll just take it like that. If it's like 1 to 1.5, then you'll take it to the next one. But yeah, that's how you would probably take this trade. Again, this is super sped up. Does it go all the way Asian? And it does go all the way Asian lows. See what I'm saying? So you just wait for liquidity sweep at 9:30. The 9:30 candle, or the first few candles, will show you. This 9:30 candle was indecisive. This is literally kind of what happened today on the charts. We had this like indecisive candle, then we had a strong candle. I got in to take it to liquidity, but this one was really close. And then there was like one more like right here that I thought we could take it to, and I didn't wait for this candle to close, so I got in. It was blue right here, because my candles on my chart are blue and white. And then it hammered when the candle closed, and then I lost. And it's a clear sign for a down. This long wick, clear sign for a down. So you have to really wait for the candle to close, which I lately have not been doing. I've been getting really impatient because of candles like this on the 5-minute. It will close and it's already to your take profit, so you can't even take that trade. However, it's just one of those things where usually if you don't, it'll still go down a lot, I've learned. So if you have to get in down here, you can take it to down here and you'll be fine. You know what I'm saying? So you can't get greedy and impatient, because if you lose, you'll lose. And that's what happened to me today. It wasn't fun. Wait for a candle close. And that's why I like the 5-minute at first, because you have to really be patient, because on the 1 minute, you can get like faked out by all these. Faked out by these little movements, and it'll like candle close below something and still go against you, versus the 5-minute will really tell you where it wants to go. It doesn't really have many hiccups or like fake out moments. Like this is a kind of a fake out moment right here. This big fair value gap, tap back into it, even inversed it on this one to go up. But the part liquidity is here, so that you would expect it to go up to here. After that, not on you. But you can get little fake outs like this, but it's rare on the 5-minute. Like it tells you where it wants to go. Like this candle is letting you know we want to go down after this candle. So that's just one of those things where I'm just like, you live and you learn. So remove all of the markings and we go to the next day. Go to next New York session. Same thing. Lows. Now this is London low, but we have 2 equal lows below it, so you would mark that. You just mark out, your prominent lows. Asian low is not too much further down. However, I like this low better. And that's what I try to do. I try to mark liquidity buy side and sell side. Now we have a big run up. There might even be a fair value gap in here, but we have equal highs and equal lows, low key. And on the 15-minute, we do have a big fair value gap, but it's a little too big. We're already in part of it, so let's mark out a 5-minute one. Like I said, on my chart, on this one, they're already marked for me, so I just gotta like expand it, which I love. Just keeps my eyes going. But on this, you just gotta mark it. And I make mine red for if they're bearish fair value gaps, and I make them green if they're bullish. I don't just do one color. I know a lot of people do, but I just think it's easier for yourself to know. Like it's supposed to bounce off of it. If it closes above this, we're inverse. You know what I'm saying? Versus like just one color. And then this 15-minute one, I didn't want to use because we're already in it. So it'll be a lot of movement. Like this is a big move from here to here that you could play off of, versus this 5-minute one, smaller move to play off of. So it just, you wait for it to go in here and then reject it. So let's see, we mark out the 9:30, mark out the 10:30, and I'm just trying to keep it simple. Obviously, you can trade this terribly like I did today. You can know where it's going, know all the things. And I guess the market right 90% of the time. Do I trade it right 90% of the time? Not even close. One day I will. And then obviously 8:30 market open. So sometimes, people trade 8:30, or you'll see like a reversal at 8:30. You'll just see things. You might see liquidity sweep at 8:30. And it's just going down but it's trading a little sideways, and then it's still going down by 9:30. So I just mark out 8:30 as well. Let's see. Okay. 9:30 candle. This is one where I don't think we can do anything off of that. Let's see. I like to mark if there's a fair value gap after a candle like this, and there's not. We swept liquidity, sell side, but it's still, I don't know. We have no bias of where it wants to go. We do have a fair value gap here, a small green one. Sometimes you could say if it closes below that, it's a reversal. Again, this candle is very indecisive. I've learned to look at candles too. Okay, maybe now we're already close. I don't like this, but let's see. Maybe now we can get into a sell. We have a strong red candle. Already swept liquidity. I don't like candles this big because where do you put your stop loss? Let's look on the 15-minute. There is some equal lows down here. Maybe we can take it to there. Again, since we're back testing, we can just test everything. Again, maybe this is a day you don't trade. Let's see. And stopped out. See, tight. These are the trades I don't like because technically we were right. Very much right. Stop loss, not. It's just too tight, which I've done this. But then a stop loss way up here is where you're supposed to put it. If you trade ICT, it's above the most prominent swing high or low. Now you are risking not a good risk to reward. However, like I said, usually if you have to have a big stop loss, it will give you what you want. So let's see if it goes all the way down to here. 1 to 1.7 isn't bad. I usually like to do a minimum of 1 to 1.5. Or anything above a 1 if it's something like this where because I like to trade every day. That's a me thing. It's not I don't suggest it. I like to do it every day because there's a setup every day, and that's why we backtest like this, because there really is. Let's see. This will be a day where, So yeah, this was a day where you probably shouldn't take it because this is not a clean enough risk to reward. But it went down to this second target, which I added because of the big candle. But yeah, this is one of those days. I mean, we can keep going, but once it moves a big bunch like that, it's reversing on you. So yeah, this is one of those days. Or you could have just waited. I wouldn't, because like I said, I get in this first hour at 9:30 to 10:30. If though you are a patient trader who can wait and do all the things, you'd probably wait for this fair value gap here and got in, even though I didn't really tap into it. But I trade displacement candles on the 5-minute because in the 5-minute I've noticed too, it won't always tap into fair value gaps. It's not even it almost always does. I feel like it's 50% of the time, maybe 60. So when I trade on the 5-minute, let me remove this. Once we get these swing highs broken with a candle close, then I get in. Sometimes I do get in early, like I said. I'll get in down here to get a better entry, and sometimes it will I won't wait for the candle close. It'll be up here, and then it will close down here, and I'll lose. That's where my losses have been, not waiting for these 5-minute candles to fully close. Then you can take it to this news candle. I mean, this technically was news, was it 10 o'clock news? 10 o'clock news usually doesn't do anything, but sometimes it randomly does. So I guess that would be the trade. And the entry would be after 10:30, so I probably wouldn't take it, but that's only an hour after too. That's what I'm saying. I have to work on my patience because this is one of those things where you could just wait for this setup, and it's a perfect setup. It's better than this setup. However, I showed you how this setup is something more I would have took. I probably would have lost because I don't like big stop losses. I really don't. But maybe, I don't know, maybe the top of the candle before. I need to figure out a strategy for this because that's what happens to me a lot. And see almost 1 to 1.5. That is more of a trade I will take versus the second one. But obviously the second one is a way better trade. So I need to be more patient with that. So yeah, this is what you do. This is what you do. This is it. This is it. And you wouldn't really know about the inverted fair value gap about sells because these candles wouldn't let you know. But this inversion of this fair value gap is what consolidated it, and then the candles what confirmed it. And then with the candles being crazy, you just wait a little bit. Maybe even would have got in on this candle, but you see you would have your stop loss can't be above the candle because it just stopped you right out. So maybe this is one of those days you didn't trade, one of those days you wait for the second trade, one of those days you just took a loss, whatever happens, and you just move on about your second day. Okay, next session. I meant next New York session. News is usually at 8:30. So that's why I trade 8:30 afterwards. Some people get on at 7, some people get on at 8, some people get on at all these things. Okay, on the 15-minute, we've kind of been trading sideways. So we do have the Asian and London liquidity. We've already got the buy side. So I feel like the next one, this is probably like a PM, New York PM session, these liquidity points. Let's just mark them, You mark them. Also, I use the 15-minute chart now because it respects fair value gaps a lot without waiting for the 1 hour chart. So it will like go up to a fair value gap like this and then reverse from it and go higher. And then if it's like inverted, it will keep going higher. Even though this one was inverted, but see, I respected it twice, bounce, and now we inverted it. So we're probably gonna keep going. Inverted this first one, so now the second one, it's like eh. But I feel like it respects it more. And or I love seeing an inversion from a fair value on the 15-minute. It like double confirms, and the liquidity points are stronger. Like on the 5-minute, liquidity was here in London and Asian, but it went all the way down to another liquidity point on the 15-minute that you wouldn't have seen if you were super zoomed in. Okay, let's mark 9:30 and 10:30. 9:30 and 10:30. I actually hope this is working on YouTube. I don't know if it is. It should be. I think it's streaming. It says we are. Yeah, it says we're streaming, so I don't see anyone in the chat, but obviously it's my first stream and don't have any followers, so that's fine. Not my dad calling me. I gotta call you back later, sir. Let me. Okay. 9:30. We got a liquidity sweep. Let's see if it reverses from there. Swing high to break above is here, but it could create another one. That's why I don't like marking this on replay, because it will create another one. Probably keep going lower. Oh, yeah, it's one of those. One of those. Is there another liquidity point we could target? There's one here. And we got strong displacement on this first candle. So I would get in here. Like I said, I am trigger happy and I like to just study price action and get little moves. And I don't mind it because I take my trades to like the closest liquidity point. That's it. I don't try to do 1 to 20s, 1 to 5s, 1 to whatever. So even like any one of these, if it gives me a good risk to reward, I would take like even this London, not the ice cream man. Let's see, this is the London of that day. This is the Asian of that day. All right. So how far would I take my trade? Yeah, see, even like the first one is not that bad. The second one's not that bad either. Will we reverse from one of these? Let's see. Oh, it's trading a little sideways. Okay, got stopped out. Got stopped out, so this has been a loss. But, okay, this is one of the days where if my stop loss wasn't tight enough, I would have just sold at one of these, back in profit. And this is why I'm talking about about options, because I've been talking about how I want to go back to trading options instead of futures, because like on options though, this is just a huge loss versus like with futures. If you didn't have your stop loss, if I had it like a little higher, I could still make money taking it back into the green. Versus any sideways not strong motion on options is a loss, because you need to do to make a good amount of money. Okay, so that was a loss and that's it. And you kind of just trade like this. What time is this candle? This is 10:05. So you could have waited for that. A liquidity sweep but we did sweep this sell side. But also it's kind of trading the raging market in general, so that's one of those things where, like, say you got on at 8:30, 8:30 would have been a better day to get on at 8:30, a better time to get on this day, but it is what it is. I personally don't have the patience I did have the patience at one point to sit on at 8:30 until 12 o'clock, but summer just hasn't been beneficial to me. And I feel like I have moments where I get profitable, or I get funded, or these things, and then my trading just gets so much worse. Like that. Like, oh, I don't have patience now to trade for 2 hours. Girl, get a grip. Let's see. Okay, we already took out the liquidity. So this might be one of those ones you have to go to like a higher time frame. Oh, yeah, we took out. I mean, I guess it's a little far for me. Like I said, we'll do these 3. Oh yeah, that one's this one, isn't it? Yeah, that one's right there. Okay. Alright, we already swept the buy side. So 8:30. What's 9:30 gonna bring to us? Alright, we're running now. Okay, this is one of those days where your inverted fair value gaps will come into play. We already swept some liquidity a bunch. We went into a fair value gap up here. So it's one of those ones where once we bounce out of this fair value gap, or did we go into it? Barely. Bounce right off of it. Once we close below, which we did here, and then we also have, you know, if you trade off of fair value gaps, this one here, for it to go back into, you can wait for it to go back into that. I probably, again, not that smart, but like, well, it's not 9:30. Let's wait for the 9:30 candle to actually play out. Exactly. See, that's why you wait for the 9:30 candle to play out. So this has been one of those ones where, like I said, I always wait for the 9:30 candle to play out for things like this, because that candle has so much volatility that you just don't know what's going to happen. Okay, so it didn't stop this out. It didn't close above this to invert this. So we're still waiting. We're not in a trade yet. I actually really like when there's like, I prefer it when there's like a bearish fair value gap, like a low space here, a bullish one here, and we're trading in between. And then once we just invert one, like close on the other side of each one, then I know what direction we're going to. Those are my favorite days, actually. Oof, see? Once we inverted this, I said technically I would have gotten in right there, but it wasn't the 9:30 candle. And the next candle after that just demolished it. So this is a trade you would have just had to miss, I'm sorry to say. Or you can maybe get in here, since our target is where? Way down there. But I feel like your target still can even be this one. But I don't know, man. When that candle, like I said, that full candle, displacement candle closes, I mean, you can scalp that. But, because even this, getting in here, your stop loss would need to be way up here. Like, you see what I'm saying? Like, sometimes with certain setups on ICT, like, that's what's been scaring me lately, like, how far my stop loss is from certain entries on the 5-minute. Stopped out. So, you'd be glad you missed this trade, or this candle was long like that. But then once we inverted this one, we should be going up. Candle close above. I like to do a fill of the fair value gap, or liquidity is right there. Again, who the fuck knows? This is why we back test. All right, hit TP and stop drought. See what I'm saying? Like, there's certain places where, like, because technically, if you get in like right after MS, a market structure shift, which I prefer to, your stop loss, like if say this was the play, your stop loss is here, you're closer to your stop loss. Versus here, technically, it can do whatever it wants to do until this swing low. That's the swing low before the move. That's so much you're risking for this little gain. That's like, but technically, that's what the market, it can do that. It can trade all up in here and then go. Like, that's just how the market moves. So it's like, it's one of those days where I guess, yeah, if you're a professional trader, you probably would not trade this day. But it's like when I know where it's going, I'm trying to get in. So it's like mastering my stop losses on the 5 minute have been a problem. Where I see how I know where it's going. It's just one of those things. It's one of those headaches. Next New York session. Okay, where are we at? Some trading sideways, a gap to fill here. Will it fill it? Who knows? Liquidity. Let's make this full screen. A nice fat one right here. And we already swept it. It looks like we're still going. So where is the next one? Okay, this gigantic fair value gap on the 15-minute. Bearish, so we make it red. Next liquidity point above that. We'll do this one. We'll mark both. I like to mark both. Sometimes I'm like, okay. Where are we now? We're right here. This is where we are. So at this point, I don't like to come with a bias because some people are like, oh, well, we'll wait for it to get to this, bearish value gap and reverse off of that, Let's just see. Let's just see what the market wants to do. 9:30, okay. Hit play. Okay. 9:30 candle strong. It's already closed. Wait. Did it wick in there? It did. Okay, so it wicked in there. Strong hammer to the downside. So this is one of the ones where since we bounced out of this, we already hit into this fair value gap. I would either wait for it to break below there or maybe wait for one more candle. But then again, your stop loss is freaking massive, which I don't like. And you see why you wait? Now, would I get in for a buy here to take it to that upside? I don't know. In real time, who knows? I probably would though, because I'm trigger happy. Stop loss where? I don't know. I'm gonna do below this red candle instead of just the candle. That's still a good 1 to 2.9 to 2.1 to 2.29. Let's see. Boom. Oh, okay. Played out. So see what I'm saying? You kind of wait. You kind of wait for it to show you where it wants to go. I love long wick candles like this. I usually enter the candle after this one, especially if I'm over leveraging sometimes, like I've kind of been doing, to just get max funded faster. You can just trade this one long candle. That's how I did that 3K day. Just this one long candle and move on about your life. But yeah, good trade, good stop loss, quick. I love these quick trades. My patience are really bad for that. The ones that just do regular price action up and down. But yeah, wait for the 9:30 candle. It will show you. And it's crazy because we did have a wick here, but it's just something like I like a wick and then a displacement down, like today was one of these. A wick, close below a swing low. And then if you weren't sure, you could wait for the next one, close below, you could have gotten on this third candle. That's what I like to wait for. Do I all the time? No, because I'm just a beginner and want to get on and make money, so it messes me up sometimes. But this is why I backtest, because it shows me like, oh, you can be patient. You can get in late. It's literally fine. It's better than losing. Getting in late is better than losing. I don't know who needs to hear that, but getting in late is better than losing. All right, liquidity already kind of swept. Kind of got a nice big head and shoulders here. So I don't want to go into bias, but it's giving me wants to keep going lower. is what I'm getting from this information here. We also have a fair value gap. That's the only good thing about setups like this, where it's like, dang, we already kind of swept liquidity. Are we going to reverse? When you get a big gap like this, once we invert this thing, we're definitely going down. Like, if it closes below this green one on the 15-minute, now, will you have the patience to stay in that? I don't sometimes. Wait for it. But we'll see. Luckily, again, I don't even get on at 8, like I said, I don't get on at 8:30 anymore to be trigger happy. I just wait for 9:30. So hopefully when 9:30 happens, it closes below this green one already. That'll be my favorite thing. Oh, see that? See why you wait? And we got market structure shift. Again, it's still not 9:30 though, so it's a strong displacement. I wouldn't trade it. I'm gonna mark this 5-minute fair value gap though, because again, if we invert it, but this is one of the things where you can't like hold on to the inversions, because I don't like going to the bias sometimes, because then I'll look and wait for it to just invert to go down. And it's like, no, where is it telling me it wants to go? Okay, now, boom, 9:30 went stupid. So this is the day I would not trade at all. Not at all. It did go back into this for a regular market structure shift day. Swing high, broken, strong displacement, tap back to the fair value gap for an entry. So if you were ready for that, you could have been in there and see why your bias of it could go down, it could go up, messes you up, because if you're looking for this inversion, it's like, but also some people play off as soon as it hits in here, and that's why I watched a 15-minute. As soon as it hits in the fair value gap and closes above, some people play that as well. So this candle's a little too weak for that, but I think you could have got a buy at this candle. Again, before 9:30 though, so I was like, it could have just gone. But that 9:30 candle went down. And this is what we're talking about, where like sometimes I'll get in before the 9:30 candle closes for stuff like this, but like, it's one day. Like, you can make money the next day. You should not be getting in on candles like this, because this candle can easily go all the way up here, sweep all this liquidity, and close red with a strong wick, and then you'd be like, damn, it's about to go down for days. So yeah, I mean, we can keep watching, because again, it's only 9:30. I'd still be in the chart. So once we got like another, especially because once you get a liquidity sweep like that, if it doesn't keep running and it reverses, then you're expecting this fair value gap to get inverted. Okay, we did not candle close below, just tapped. And it's one day again, I just wouldn't trade. Because now it's 10:30. Would I get in this trade at 10:30? I don't know, but let's see how it plays out. Again, I'm not marking the order to see how much money you'd make, because the goal is to just focus on guessing where the market goes. That's all this game is guessing where you think the market would go. That's it. The money is just added bonus. And if you can't guess where the market's going to go, you're not going to make any money. So there's no point. And it doesn't matter, because you might over leverage, you might under leverage, you might make $10 on this trade. I mean, you can't really make $10 if you're trading NQ. If you're trading options, you can. But you know what I'm saying? Like, you might be trying to make $500 a day, so you're going to leverage more than I would, or vice versa. So it's no point of actually doing the order thing. Okay, let's see how it played out. We got to close below. High stop loss. Is it high enough? No. Again, this is the day I said I probably would not trade. Traded sideways till, 12 is way down here, but I don't think, yeah. It's 12 o'clock, so I just would have closed the trade. But I probably wouldn't have even gotten in this trade. Let's see. Is it still gonna? Yeah, it'd be a loss. Perfect. And a loss that's 2 hours long is not fun. So yeah, it's just one of those days where you just wouldn't have traded. And unless you're a scalper. So there's days like this where like my over leveraging trading days, I love, because you just, like say, okay, well maybe not. If you got in down here, there was nothing for you to do. However, if you maybe got in this 9:30 candle before you should have, and took it into this red one, that would have been a nice little move. But yeah, this is a day where you just don't trade. And that's fine. That's totally fine. Damn, I am already at 30 minutes of back testing. I feel like, I don't know, should I just keep going? I mean, I might as well. Let's keep going. I'm going to keep going without going live anyway, so it really doesn't matter. But yeah, this is what you do. If you trade trend lines or you trade levels, this is how you should be backtesting. And it's funny because I was so anti-backtesting. If you have watched any of my content, I was so anti-backtesting because when I was told to backtest, I was told just to like go back on the chart and see what happens. Like today, liquidity sweep, close below, run down. And then you go on the next day and you're like, when did I see? Oh, liquidity sweep, go down. But you already know what you're looking for. Once I discovered FX replay and actually like playing it like a guessing game and not just like going back like, oh, liquidity sweep, strong hammer candle down, get in to the next liquidity point. Like that as ineffective. So that's why I was like, I didn't trade because I started trading in 2020 and that's what people would tell you to do. I'm like, no. And I was trading options. I don't know if a lot of option traders use FX replay, but I think they do now. When I discovered FX replay, I was like, oh, this is actually great. It's like a game and you can really just trade and you can really do all these things and learn and practice how your strategy works. And you can practice other strategies that you see on YouTube, which I might start a YouTube series about that, like testing other people's strategies and see how they work. Okay, liquidity. I love when a 15-minute and a 5-minute fair value gap line up beautifully. So either it's going to bounce off of it or invert it beautifully and you go on about your fucking day. So we already came out of it. There's already liquidity there. We have a huge bearish fair value gap that I'm not going to mark because we're already in it. So at this point, you're just waiting for the market to do what it wants to do. Like go up and reverse at any point and give us like a market structure shift in the middle or, invert this one and keep going. That's really what we're waiting for. And you can even mark in some 5-minute ones if you want just to get a better entry. Again, I don't know because that again is an hour or so before I get on the chart. That wouldn't be my concern at the time. But when I get on, I would mark those. Let's see. Alright, not 9:30, okay. Not 9:30 still. 9:30. Crazy candle. Crazy candle. Very indecisive candle. That's why you wait. Because see, even if you're in a sell trade or a buy trade, this whole candle would have stopped you out on both sides. See what I'm saying? Like, I just stopped getting in before 9:30 unless I'm very, very confident. Obviously, it's worked for me a few times, but like, it can get real scary. And then once I get a loss, I'm already very scary with my other trades. I'm already very stop loss too tight when it shouldn't be on my second trade. So, all right. This is one of those days, I probably wouldn't trade either. You could get in after this strong body close. There's still a big wick up here. Next liquidity is up here, but all these candles are very indecisive, so it wouldn't be emotionally good to trade. And this is I'm talking about as a beginner. Like as a beginner, like we pros can probably sit through this like it's nothing. Like it's just, cause see even here, you need to have your stop loss like way below here or something. And it's just not worth it. It's not even a 1-to-1. Cause see how if you did like halfway, this candle's already stopping you out. So it's like, I mean, there is that other liquidity point way up here, right? Or is that the one? Oh no, that is the one. Dang, maybe let's mark this one. But see, it's just too close. It's not even fucking worth it to get in this trade. It's probably better to wait for it to just, this one of those days too, where sometimes when it's close, I think that's what I've been doing lately. I've been trying to catch these quick moves because I'm risking more and just to make a, like my 1,500 a day to get funded faster. So these candles can just really give me what I need. However, this is one of those days you should just wait for it to sweep this liquidity actually, and then a reverse from there. Now I'm thinking about it. Now that I'm looking at it, you probably should just wait. Now, like I said, if you wanted to take that trade, it did play out. What did I say? This stop loss below this candle. Do I think it's worth it? No, I don't want to do that. Do I think it's worth it? 1 to 1.7, not terrible. I wouldn't be mad at that. However, let's see if we get a better setup at the 10:30. We do a strong displacement candle. There's not really a gap right here. I don't know. Would I get in? I mean, I would kind of want to wait for a value gap to be made somewhere to be inverted or respected. However, on the 5-minute, a strong move like that, this is probably not the best trade to take. Again, this is the best part of backtest. You can just see, like, would I take this stupid ass trade or would I not? Should I? Should I not? That's the 1 and 2, and it's a bigger move. You might make almost double than what you made that first trade. Oh, nope. Got a little displacement there. It did stop out this liquidity. And that's why I always say first liquidity always trumps. So no. The first trade that I said probably wasn't a good risk was the one you should take. I don't know candle, strong body candle, liquidity super close. I probably would have took it just to the second liquidity here and then going about my day. Now my computer dying. Yeah, I'll probably just stop right here for today and then I'll do either longer tomorrow. That 30 minutes did actually go by very fast. I'm doing this every day, so this doesn't matter. Every day, 30 minutes, and then maybe we'll go to an hour next time once more people get in here. We'll see. But if you're watching my live, thanks. Hope that helped, and let me know. Probably DM me things you want to see because I cannot really see the chat on TikTok because I have like a phone holder for this. But yeah, that is the live. How do I stop the live? There we go. End on TikTok, and then stop recording, stop streaming.